Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday, September 23rd. Great to see everybody. You know, I was just reminded watching some of the action over this week, and I posted this on my Twitter, and it just never stops being funny. Did you know there was such a thing as combat juggling? And if this is kind of how you feel this week, you're probably not alone. I mean, really, this is hilarious. I can't juggle. Clearly, these are very talented jugglers. And then you're trying to knock oh my God. You can check it out on my Twitter feed. So this is what's been going on this week. We are combat juggling. Yes. All right. So great to see everybody. Thanks for being a part of the show. All right. Now, the post FOMC reaction so far seems to be pretty bullish because let's face it, taper does not mean it's an end to asset purchases, but rather it's just less. I mean, look, they're still printing. They're just not printing as much. They're still buying. They're just not buying as much. They meaning the Federal Reserve. It's hardly a reason for the markets to crumble. I think Monday's action was part, we have the Federal Reserve this week, and part, don't fade Fridays. That little guideline, that truism, definitely panned out. And then you add Evergrande, which is really in many ways sort of this, we have this Archegos memory, which it wasn't that long ago. And I think had Archegos not happened, there may not be quite as intense a reaction to what's happening with Evergrande. But what's also interesting is that this sort of feels like Archegos Part 2. If there is this, you know, what have they been calling it? What's the thing? Lehman moment for China. I mean, that's what I hear the most on financial television. If that's the case, then we wonder where the reverberations are going to be, because we remember how far and wide the shenanigans around Archegos were. So, you know, the market has now made a U-turn. I mean, if you take a look at the NAS and the S&P, little seller's remorse, we're pretty much back at that point, which means sort of it's a tie ball game. It's a 0-0 ball game again. And now we'll see what, you know, the bulls really are capable of, or whether or not the bears are really still in charge. So today's a pretty big day based on where the price action has been able to climb back up to post FOMC. So good morning to everybody. Great to see everyone. And let's go ahead and get started with some questions here. And let's see. Good morning. Lots of folks. Good morning. Yes, great to see everybody. Great to see everybody. All right. First question of the morning. And that is, good morning, Patrick. Good to see you. When will the Hpmr be on TradingView? It's actually on TradingView. I think we're just about there. I'm still testing the beta version of it, but yeah, this is Hpmr on TradingView, courtesy Lorna. And this is, for those of you that are not aware of what this is a process that I created, gosh, I probably 7-8 years ago at this point in the Forex markets. And it's a very simple arithmetic process where we look at the current hours high, we look at the current hours low, and we basically subtract what's known as the hourly price movement range. That's where Hpmr comes from the high. We add the hourly price movement range to the low, and what that does, and I've always been very open about the calculation. What that does, it projects the highs and lows that we're seeing. So yeah, that's really what we're looking at, support and resistance. That's being calculated based on time and being calculated based on the volatility for that time of day, for that hour of the day. And you can see here, yeah, we're in the process of getting this up and running on TradingView really soon. We've had this on TOS for years and years, and now we're going to get this up and running on TradingView. So same calculation, different platform. And a lot of you know that I've been using TradingView a whole lot more in my trading. And that's very likely to continue because I love the fact that it's broker agnostic. I love the platform. I'm a big fan, huge fan. All right. So by the way, let me touch a little bit more on the where we are right now and just some of the levels that I'm keeping an eye on. One of the reasons yesterday, so if you haven't checked it out yet, back at the Simpler Trading YouTube channel, probably the channel that most of you are on right now, I talked about the day trade that we put on yesterday. And there was a setup on the S&P. There's a really nice setup on the NASDAQ. And I know a lot of folks think, oh, well, day trading must mean, Rog, you're trading futures. Yes, but you can also take those same setups and as I like to say, choose your own adventure and enter micros. It doesn't have to be the mini. Or you can enter calls on QQQ. And that's something that we did yesterday. Scooped up some calls on QQQ at about $1.80. For some folks, it was a little bit less. Some folks, a little bit more. $1.80, $180 per option. We took advantage of that move. One of the reasons that we were more interested in the long side in the morning was the fact that we were above some key levels. And we are, once again, above those key levels again today. And if I can get support either via the V-score or either via Hpmrs, like I was showing you just now, those are going to be some of the opportunities to get long. That's exactly what we did yesterday. So I showed you all in the free video. So this is a free video on the channel. I showed you exactly the pattern that I look for every morning. It's straight out of the day trading playbook. It's what I do in the mastery. It's what I do in the futures room. So if you like that kind of setup, if you say to yourself, yeah, I know there's 4 factors to the market. Price is but one. Time, volume, and volatility are the other 3. And if you could take advantage of the last 2, volume and volatility, then you start to see that you're privy to levels that the broader markets simply aren't, because they're looking at the market purely through a price-oriented view, either looking straight at price, which is fine. I mean, obviously, we need to look at price. But then they're also looking at price-calculated indicators, open, high, low, close, crunch through some sort of arithmetic. So I think it's really important to keep in mind the other factors, time, volume, volatility. And HPMRs take advantage of that volatility for us. All right, next up, Chris asked my thoughts on day after Powell. Would I be surprised to see a sell the news dynamic play out today? If we were going to see a sell the news dynamic, Chris, I would have thought, although who the heck knows, but I would have thought we would have seen that shortly after 2 p.m. yesterday. Not necessarily something that as we go into the 23rd, we see strength during the Asian session. We see continued strength. I mean, really acceleration through the European and UK session. And it's actually as we were inching closer and closer to the US session, we started to see a little bit of weakness. But I would have thought that if we were going to see that reaction by the rumor sell the news, it would have been, pretty much on the heels of the presser, the 2:30 yesterday presser. Not necessarily now, although, I'm not going to rule it out. So I think for us, what's going to be so important is, where are we today in relation to yesterday's close? Where are we today in relation to yesterday's high? I think a lot of traders, when they look at the way that I day trade, especially my last class, were probably surprised to find out that a lot of the additional strategies or additional processes that I taught in this year's day trading class had to do with the daily time frame. And the daily is really important to day traders. We're not using the daily necessarily to set up a trade, but when you're looking at sentiment, momentum, where the momentum could increase, either to the up or down side, where there's going to be a shift in sentiment, a lot of times those are based on daily levels. I mean, I have 6 different things that I look at on the daily time frame, actually 5 on the daily and 1 on the weekly, to understand where we are in terms of that psychology, that mindset of bullish versus bearishness, and what the path of least resistance is likely to be. So, yeah, I think right now it's kind of, for me, disappointing because I'm a bull. More of a fan of the long side of this market. A little disappointing to see the market, retreat from, say, the 15,300 area on the Nas back down to the lows. But even where we sit right now, relative to yesterday, is still bullish as far as the way that I'm looking at it. Okay. All right. Next up is Sean asks, I downloaded the indicator, but I don't know. Are you talking about Hpmr? Yeah, Sean. So if you downloaded any one of my indicators, hit me up in one of the rooms when I'm in there, whether it be the options room, whether it be the futures or the sector secret. And yeah, I'm more than happy to help. Okay, Sean? So cool. And Lorna's in there too, by the way, in the mastery. So if you have a question about an indicator that I've either put in the room drive or that you've downloaded from TradingView, one of the indicators that I use, yeah, for sure. Let me know if you do have any issues with settings, and we'll cover that. And then remember, I'm on the mic every Wednesday. And so, if there are questions that you want me to walk you through in live trading, Wednesdays are a great day to do it. All right. Next up is, good morning. Do I fade gaps? Yes, Andres, I do fade gaps, but I look for what's known as a true gap. I think of it as a dual confirmation gap. To me, gaps are not simply an open above or below the previous session's close. I also factor in the previous session high or low. But yes, I do fade gaps. And the easiest way to fade gaps is study, say, the first 1 to 3 to 5. Those are very popular segments after the bell. I like the 5-minute segment after the bell to look for momentum breaks within that range. So we get a range, say 5 minutes in, and then the gap fade setup for me usually is going to set up after that 5th minute. I'm going to give the market 5 minutes to establish a range that I might be willing to look for momentum to emerge from. So my parameters are usually study the first 5 minutes. Next up is XLE. Hey there, Michael. I was just looking at XLE, and I continue to look at XLE because I continue to be quite bullish energy. I'm bullish crude. I'd love to see RBOB start to organize to the upside. It's not yet. So that's crude versus unleaded gas or gasoline. Many of you know that we've been bullish natural gas for a really long time. So the challenge here is, well, which commodity do I like the most? Natural gas. Where does that map to best? It's actually XOP and not XLE right now. And remember, Michael, if you want to get into XLE, keep an eye on Chevron, keep an eye on Exxon, because if you do not like the way they're looking, and Exxon, I believe, is giving us a 1, 2, 3. Chevron, not quite yet. But if you don't like the way these are structured, XLE is likely not going to get out of its own way, because the top 2 weighted stocks within the XLE are Exxon and Chevron. And that's where the importance, the flow, the increasing influence over the markets by ETFs since 2008 should really be changing the way you build watch lists and you understand setups. I think never before has this notion of what ETFs actually represent in our modern day markets. Never before have we seen more importance and intensity around it, because the boat tides analogy, what an individual stock will do in terms of its exposure to the index, that was something that up until 2008, that's all we really cared about. But now, because ETFs continue to be A, more niche driven, and B, increasingly popular, more volume and more of them, individual stocks are very influenced by their weighting within these ETFs. So that's why I always mention, when we're talking about energies, XLE, there's 3 ways we can look at it. And then when we look at each individual sector ETF, we look at the individual weighted stocks within them. So again, loving the structure of natural gas, loving that structure. It's probably, for me, more of an XOP. And by the way, I know a lot of folks have been asking, Rog, are we going to get back into natural gas? We hit the 21 exponential, which is aggro. So for those of you out there that know, hey, Rob, are we going to get into natural gas? I was really looking for something within the wave. I really wanted another entry in the wave, which, by the way, is what we did last time. At best, we have the aggro level, which I've been talking about. And I know some of the sector secrets folks, because I put the levels out there, you're already long, in which case that's fine. But remember that, the wave is still something that we will consider if we head lower. But by the way, that's what maps to XOP for me. All right, Michael, thank you for the question. How often is the HPMR updated? So, Jimmy, I put all of the HPMR packs in the mastery, and I put the futures packs in the futures room, and they're really sensitive to volatility. So if volatility contracts, I'll recalculate the HPMRs. If volatility expands, so it's not necessarily, I used to do it every 1 to 2 weeks. And then I realized that was a lot of work unnecessarily. And then a lot of updating for you all unnecessarily. So in an effort to streamline and simplify, I'm updating them as I see those volatility levels expand or contract. So we do have some new packs that are going to get uploaded into the rim drives for toss. And then actually, Lorna just hit me up. Yeah. She's like, hey, we got to put them in toss. Yeah, go ahead and do it, Lorna Bot. Yeah. All right. So that is the HPMR frequency. It doesn't need to be done as often as I used to. Now I just sort of use my judgment in terms of the way volatility is behaving, just so it doesn't become so cumbersome for all of us. All right. Do I ever hold a losing position in my longer term portfolio? Well, again, I don't mind well, I mean, of course, I think all of us have had losing positions, but what defines losing, right? For me, we can look at losing from the perspective of unrealized losses, certain percentages, certain dollar amounts, whatever it is. But for me, it's about point of validity. That's just a little term that I coined to replace the word stop loss. So the positions in my portfolio have a 6-month minimum duration. I'll give or very, 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 very least 1 quarter. I'm going to give a position that I've added to my longer term portfolio at least until the end of quarter balancing to sort of earn its spot on the roster. If you think about your longer term portfolio, and this is what I've always done, I've got 5 portfolios, they have different sort of maturity durations. Some are retirement, therefore very, very long term. Some are more oriented to, say, college. Others are oriented to just sort of a fund that I have for fund spending. Okay, those are sort of the 2 odd ones. The other 3 are all retirement portfolios. So the thing to remember is that if it's a long duration and over time, you can accumulate a lot of different positions. The way that I advocate doing it is much like the roster on a baseball team. There's only so many players you can put on that team roster, right? So I kind of use that 25. And I found for me, when I'm sitting at about 25 positions per portfolio, no more than that, it's concentrated, I'm discerning, and it has to earn its way. Imagine if it was unlimited. Right? Imagine it was unlimited and the door was always open to a stock coming in or an ETF coming in or an ETF coming out. It's never going to be as focused and probably as productive as it could be if you were just to say, allowed 25. And that means that the best 25 players make it on the roster. And I give a player, if you will, following this analogy, about 6 months to prove itself. So Monday was a really big day for some portfolio entries for me. Pullbacks that we saw on Monday, I added to my longer term portfolio. And now the 6-month countdown, so to speak, begins. Okay. So when I say losing, it's not a matter of it going against me. I mean, everyone's going to have positions in their portfolio that might have unrealized loss, but it's a matter of, has it proven itself over that course of 6 months? So the simple answer is yes. But the more involved answer is there's a reason that it's on my portfolio and I have a longer duration. If it's able to survive end of quarter rebalancing, or 6 months, then it's likely going to be something I will keep. It's going to be sort of a player that will continue to be on the roster. All right. If we get down to 15,130, in Q, but we have a double red trade flag. Will I still take the trade? 15,130. Well, I don't think we're going to, I mean, we're not even yellow. So are you talking intraday, Alex, or end of day? I mean, if we're double red, period. Okay, let's just blanket double red, period. I'm going to be, if I've got red over red, 8, 13, 21, 34 EMAs indicating more structure that's bearish, I'm going to be cautious anyways. Will I take the trade? It depends on the setup. Depends on the setup, Alex. But generally speaking, it'll definitely get me to pause. Okay. Do I take V-score entries before the bell? Derek, very seldom. Very seldom. I used to do it more if I got up early between 4 and 7 a.m. Eastern. And maybe as late as 8:30 if there's an economic hot zone. So if there's an 8:30 hot zone like we had today, then it's tempting. Yeah, then it's tempting, and I'll think about it. Okay. All right. So with that being said, that is it for Charts and Coffee. Thank you as always for your time. Thank you especially for the questions. Great questions. I'm sure many of you are going to your respective rooms now. I'll see you in the Sector Secrets. I'll be in the chat, just hanging out with you all there. And then I'll see you all later on in the Futures room. And as always, thanks for being a part of our Simpler Trading community. Thanks for all the comments. Thanks for all the thumbs up. I appreciate it. Smash that like button on the way out. I'll see you tomorrow. Same time, same station. Be good to each other, gang.